General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, week over. Oh, it's interesting. Let me see. We want to see the CME Fed watch. Now that NFP is over, what are they feeling? How will the economic data affect their outlook on interest rates? 91% no change. Okay, I'm gonna add this first. Let's go here. Logs. Friday, February 7th, 2025. Add cover. NFP, what's today? And this is, so sentiment is saying no change. To the Fed fund rate. Let's go to today. This target hit. We didn't hit this, I don't think. Oh, we did. That was actually perfect. It didn't trigger because the line wasn't scooted far enough. Note to self on that. Liquidity imbalance. Textbook weak altogether. Really walked this week down as far as direction. Go to the weekly. So we wicked that and wicked that. And we came back to 50% of this range. The VIX was high today. So it was like, it was going to be choppy. And it was going to cost more to get into a position because of that. It's just Perfect. Okay, swell previous week's high. And returned to EQ of the weekly DR. Let's go to the daily. Okay. We almost closed below this low, but it is what it is. We still ain't completely put no bodies in this gap. This level's still interesting though. This will be like an order block for next week. Still didn't feel the gap all the way. Could just be a retracement. Retracement for lower prices. Sunday, I'll map out the week. We have been in this range for a while. Let's go to H4. Yeah, we came past TGIF too. So that was TGIF right here. Still like lower prices here. Textbook TGIF completed today. Also a sweep from previous week's high. Was the high of the week. Low of the week was on Monday. Was on Monday because people were scared of tariff quote unquote trade war. Let's go to H1. Yeah, I don't know if we broke through it like that on H4. No, we didn't. Let the weekend come back on Sunday to figure out how next week should go. Come back on Sunday to forecast what to figure out, plan for next week. As of now, I'm thinking lower prices. All right, that's that on that. Friday's an easy day. Y'all have a good day. Peace.